The final exam of University of London Principles of Accounting subject, Zone B, question 17, cash flow statement. A typical cash flow statement question. It's just very important to know what appears in the cash flow and where it appears. Most of the figures here are very straightforward. The difficult figures involve, I believe, 4 to 5 computations, and we'll walk through the question right now. So the first thing is to find out which profit is given, which exact profit is given. As you know, there are a lot of different profits: profit before tax or operating profit before tax, profit before interest and tax or operating profit, net profit, profit for the year, which is synonymous to the net profit. And we have just to find out the profit we are given. Here we can see operating profit, and basically this is the line we can use for the start of our cash flow statement. Sometimes the students are given profit before tax and some interest expense, maybe preferred dividends, and if there is no operating profit line in the question, you can easily compute it, just adding back interest expense and preferred dividends paid during the year. So let's start. The first line here would be operating profit, or to be more precise, the first line should be, I believe, cash flow statement for the year ended blah blah blah, because we have to name each financial statement we compile. So let's name cash flow statement of the company. This would be the cash flow statement for the year ended at the 31st of December 2018. Oops. We also have to state the name of the company and the currency we use. The currency and the size of the currency, I mean millions, thousands, hundreds, or just pounds. We would be using just, using 1,000 of pounds here. So the name of the company is Graham Limited. And the currency we use is pounds in thousands. So once we state the currency, we can just write numbers without stipulating one more time the currency or the size of the figures, the size of the amounts. So the first line to start with would be operating profit. Operating profit, often referred as profit before interest and tax. So I will state in brackets that abbreviation PBIT means the same. The amount of profit before interest and tax is given in that particular tax, and we just highlighted it with a pink. So 174 is the first amount to use here. Then we have to adjust it for non-cash income and expenses. I will change the color and state it here, adjustments for non-cash items. Basically, there could be only 3 lines. Only 3 lines could appear here. That would be depreciation and amortization for the year. We do know that depreciation and amortization are expenses. It's like the expensing of long-term assets, but these are not cash expenses. Here we can find profit or loss on disposal, of non-current assets. And the third item, which could appear here, but it's really not often that we come up with that line in the problems. These are bad debts expense, bad debt provision increase or decrease. So I will highlight it, I will define it as bad debts. Once we have adjusted cash flow statement for non-cash items, we have to adjust for changes in working capital. So I will change the color one more time and state it here. So we have to adjust for changes in working capital. Working capital is the cash, inventory, accounts receivable, and accounts payable. But since the whole statement is about cash, we have to consider only current assets and non-current assets and current liabilities, except for cash. So let's start. Depreciation and amortization. I believe this is the first computational question here. We have to compute depreciation for the year. So I will add some working space below the statement, and we'll call it workings 1. And let's see what is given. We are told that the company, in the additional information, the company's depreciation policy is not to depreciate the land, but to depreciate the plant and machinery. We're also given with the information that during the year, some items of PPE were sold for cash, and we are given with the net book value of machines. We're also given with the information about purchases of property, plant, and machinery. So the company acquired some machinery. And if we look at the balance sheet here, we can see lines land, which is not depreciated, and since we see the increased amount of land, we can assume the purchase of land during the period. And plant and machinery amount, the total amount decreased, so nevertheless the company purchased something, but still the total amount decreased, so we have to consider some expense, I believe, which is called depreciation. So let's prepare so-called roll forward of non-current assets. So I will copy the amounts to our workings, and we'll be using that figures. This is the end of the year 2018, and this is the beginning of the year 2017. So basically land is not a depreciable item, so the only change here could happen due purchase or sale of any piece of land. And since the total amount increased from 140 to 170, I believe that there was a purchase of land during the year in a total amount of 30,000 pounds. But before we make that conclusion, we have to check for revaluation reserve, because the land is the only asset which could be revalued. We do not depreciate land because we consider that type of resource is like couldn't be used up. In Russian, we call it неисчерпаемый resource. That is the reason for non-depreciated definition. But when we talk about revaluation, this could be the only asset which could be revalued, not plant, not machinery, not vehicles, but land and sometimes buildings. I mean in the your principle of accounting subject. So we have to consider revaluation reserve here, and if we have it, and we have it here, revaluation reserve, we have to consider the change. Since the total increase in revaluation reserve is 5, we can assume that that land was revalued from 140 at the beginning of the year to 145 during the year. But at the end of the year, eventually we have 170. That means that during the year, company additionally purchased some pieces of land in a total cost of 25. So that would be the additions of land. We have to consider it in the second part of cash flow statement when we'll be writing down the sums paid and sums received from purchases and sale of non-current assets. So let's proceed to plant and machinery. Plant and machinery should be depreciated, and we are told about some additions and disposals. So at the beginning of the year, the company had 121,000 of machinery, and at the end of the year, 111. What has happened during the year? There were some additions, there were some disposals which should be deducted, and there were some depreciation, because in the statement of financial position, that amounts are net book value, net of accumulated depreciation. So if we consider all additions and disposals during the year, we can easily compute depreciation out of that simple equation. So the total disposals, net book value of disposals was 8,000. Acquisitions was 14,000. And now we can compute the depreciation. So let's use that amounts. Additions in amount of 14. Disposals in amount of 8. Depreciation could be assumed as X, and then X is 16. That amount should be stated as accumulated depreciation, or depreciation expense in the profit and loss statement. But since that amount, depreciation expense, was deducted for the purposes of profit calculation, in the cash flow statement, we have to add it back. So we have to add back 9 as depreciation previously deducted for the purposes of profit calculation. The next line is profit or loss on disposal here. And since we have just talked about some disposal, the company disposed an asset with a net book value of 8 for cash in total amount of 3,000. So we have to compare net book value of 8 with the cash received 3, and eventually we can see that the company has a loss on disposal in amount of £5,000 during the year due to that loss, because the item was sold below the net book value, for the amount below net book value. It was deducted for the purposes of profit calculation in the income statement, and now we have to add it back in order to come closer to the cash movement in the company. So we have to calculate loss on disposal and add it back in order to eliminate that effect of non-cash expense. And the last line here is bad debts, something associated with bad debts. And if we read through additional information and have a look at the balance sheet, we wouldn't find any lines associated with that item. So we can assume no bad debts, no bad debt provision in that company. And we can just skip that line. I will leave here as a blank space. And now we can move forward to the adjustments for changes in working capital. Changes in working capital means that we have to consider current assets and current liabilities, that two sections. And the first item to consider is inventory. Inventory decreased during the period. That means that a company has more cash in the operations. So decrease in inventory leads to increase in cash, and we have to calculate it. The calculation would be opening inventory 2020 from statement of financial position less closing inventory 197 leads to total decrease in inventory and the decrease in cash in amount of 23. The next line to consider here is the other current asset, accounts receivable, and accounts receivables increased during the period and increased, I would say, significantly. And increase in account receivable leads to decrease in cash. The calculations would be opening accounts receivable 714 less closing accounts receivable 1318 that lead to total decrease in cash in amount of 604. And the last line, which should appear here, since we do not see any accruals, any prepayments in the statement of financial position in that particular problem, we have to straightforwardly consider only lines which reads inventory, receivables, and payables. That's all. Payables increased also as accounts receivable, so increase in account payable in amount of, I would calculate it, 505 less 713. In amount of 2008 should be added as a cash increase in the company, because increase in accounts payable means that the company doesn't repay its liabilities that lead to cash which is stayed in the company. So the total amount of cash and operating activity increased due to the positive change in accounts payable. I mean positive only from the math side, not from the business side. Okay, now we can calculate cash from operations. So once we had adjusted profit for the year, profit before interest and tax for non-cash items and changes in working capital, we can calculate the first subtotal, which is called cash from operations. Cash from operations would be 183, but with the minus sign, negative, because the accounts receivable increased significantly. So that would be the first subtotal. And now we have to consider payments which the business, I would say, must make during the financial year, like saying thank you to the government, which allows business operate at its in its country, in its region, and thank you to the businesses, to the authorities who lend money to the business. I'm talking about tax paid during the period, interest paid during the period, and maybe preferred dividends paid, because preferred dividends are treated mostly like interest payment, since you do know that preferred shares are treated like long-term liability rather than equity of the company. So maybe we can see here preferred dividends. Of course it's not maybe, because I've seen the solution. Okay, let's consider tax paid. We have to look at the statement of financial position, and here with the blue line I've highlighted the tax line, and we can see that the company owed £17,000 to tax authorities at the beginning of the year and 26 at the end of the year. During the year, tax expense of the company was 22. And if we perform calculations, I will show you, we can easily find out the amount of tax really paid to the government during the year. So the liability at the beginning of the year was 17. Tax expense during the year, tax expense accrued, tax expense accumulated was 22 for the current year. That means that the totally company owed during the year £39,000 to the government, to the tax authorities. But since company still owes 26, we can assume that the amount which was really paid to tax authorities equals 13. Only £13,000 was paid to the tax authorities. The same logic should be used with the interest paid. With the green line, I've highlighted interest accrued at the statement of financial position. The company owed 7 at the beginning and 0 at the end. During the year, interest expense was 8, but since the liability, the current liability on interest equals 0, we can assume that the total amount was fully repaid during the year. So using the same calculation, I will show you 7 plus 8 less 0, we can find out the total amount of interest paid, which is 15,000 during the year. And what's for preferred dividends? We can see the line which reads preference share dividends in the income statement, that small income statement here. And since we do not have any information about liability on preferred dividends, we can assume that that total amount was fully repaid as well as interest. So preferred dividends in amount of 9 was were fully repaid to the shareholders, and we have to consider it as cash decrease in our cash flow statement. If you look at the solution of University of London for that exam, I mean examiner's commentaries, you can see that ordinary dividends, not preferred, were also calculated and written here in that section of cash flow statement. This is normal because accounting standard cash flow statement tells us that ordinary dividends could be stated at any section of cash flow statement. You can calculate and state it in the operating activity section, you can calculate and state it in the investing activity section, or in financing activity. I will stick up to the our usual way of solving that problems, and I will calculate ordinary dividends paid in the financing activity section. But please do not be surprised when you see that in the solutions or real financial statements. It's normal, it's allowed. So now I finalize the cash from operating activity section and calculate the total. We have to add tax and interest and preferred dividends paid to the cash from operations. I would better say deducted. And the total cash from operating activity would be 220 with a minus sign. So negative change for the period. And this is basically the first subtotal we should use while calculating total net change in cash. But before, we have to fill in sections considering investing and financing activity of the firm. So let's move to the next section, cash from investing activity. Cash from investing activity deals with receipts or like proceeds and payments to the non-current asset acquisition. We have already calculated the amount paid for the land purchased. If you remember, we used working space. So land purchase, I will show the calculations here one more time. The opening balance for land was 140. Land is the asset which should be depreciated. The land was revalued by 5 because we can see the increase in revaluation reserve. And additionally, the company purchased some pieces of land on 25,000 because the final balance of land is 170. So we can assume that 25 was spent on purchase of additional pieces of land. That means that cash in the company decreased by that amount, and we have to state it here with a minus sign. The next line is property, plant, and equipment purchase. The total amount spent on property, plant, and equipment is given. This is 14. We can easily find it in the additional information section. So 14 should be deducted as well because that amount company spent on purchase of new equipment. And 3 should be added as receipts from the sale of non-current assets. We've already considered that amount while calculating loss on disposal. So property, plant, and equipment sale proceeds will lead to insignificant increase in cash in 3,000. Basically, that is all. Nothing should be added here, and we can calculate the total, the subtotal of that section, which is 36 with a minus sign, negative, and this is the total cash from investing activity. And last section of cash flow statement is cash from financing activity. Cash from financing activity. We have to consider here all the long-term borrowings or maybe debentures and the share of issue of ordinary and preferred stock. And as I said before, we should consider here payment of ordinary dividends. So let's have a look at the statement of financial position at the section of long-term liability and equity. And we can see that under liabilities and equity, under liabilities before, well, we'll start with liabilities, we can see 2 lines. Redeemable preference shares, which increased. That means that the company issued additional shares to the shareholders in amount of 10,000. That leads to increase in non-current liability. And convertible debenture stock was repaid. The company decreased long-term liability in respect of debentures by 20,000 pounds. So we have to consider that line, issue of preferred stock plus 10 in cash, repayment of debentures less 20 in cash. Then we have to take a look at the equity section here, and we have to consider changes in ordinary share capital and share premium only. Ordinary share capital increased by 100 and share premium increased by 50. That means that the company issued during the period some new shares. And the total cash received from that operation is 150 because 100 was received for the nominal value of shares and 50 was received, that amount was received above the ordinary share nominal value. We call it share premium, and it deals somehow with the market price of the share. So basically 3 lines should appear in the cash from financing activity section and cash flow statement. Let's write them down. Issue of preferred stock. Issue of preferred stock from 50 to 60 lead to increase in cash by 10. Repayment of debentures. The company had 100 of long-term liability, and at the end of the year it was 80 only, so the company repaid £20,000 decrease in cash. And issue of ordinary shares. Issue of ordinary shares. We have just calculated that the total increase was by 10 in share capital and by 50 in share premium. Totally that lead to increase in cash in amount of 150 here. And ordinary dividends. We have to calculate ordinary dividends paid. It's a tricky question here because in the wording of the problem, we are only told that the ordinary dividends were paid during the year. But how can we calculate the amount? There is no information about dividends in income statement, and it's normal. We do not have any statement of change in equity here, but we can consider changes in the equity section at the retained earnings line in order to calculate the ordinary dividends really paid during the year. We can see that the retained earnings line increased by some amount from the beginning of the year till the end. And normally that should be due to the profit after tax and in amount of profit after tax or profit for the year the business earned. But here we can see that increase is a little bit lower. So we have to calculate the difference, and we can assume that the difference would be the dividends paid. So let's change the color and calculate it. So the opening retained earnings in the company in the statement of financial position was 156. Then company earned net income, profit after tax, 130. And basically that should be the retained earnings at the end of the year. But if the company paid dividends, the retained earnings would be lower, and we can see it here. The retained earnings at the end of the year is 182. That means that company paid dividends in amount of 104. That leads to decrease in cash during the year or at the year end. Basically, that is all. We have just to calculate the subtotal from for that section, cash from financing activity, and that would be 36 again, but with the plus sign, the positive amount, because issue of ordinary shares brought a lot of money in the company. And the last line of cash flow statement is the net change in cash or net cash for the year. So I will write it down and calculate it. Net cash for the year. We have to sum up three subtotals. The first one is cash from operating activities, 220 with a minus sign. The second is cash from investing activity, negative, also 36. And the last one is cash from financing activity, 36 with a positive sign. Net cash for the year, which should appear here, is 220 with a minus sign, the negative amount. So the total cash decreased during the year by that amount. How could we check ourselves? How could we prove that that was the net cash decrease during the year? We have to consider cash and bank balance and overdraft at the beginning and at the end of the year. So we have to consider all the cash and bank balances. At the beginning of the year in 2017, cash, bank, overdraft, total. I will do it like that, right? Total. We have to look at the statement of financial position. We don't have the special line cash, so we assume cash to be zero. Cash at bank at the beginning of the year was 23, and overdraft at the beginning of the year was 3. I will highlight it with the pink. So that amount and that amount. Let's fill in our table. Here that be cash 0, bank 33, overdraft 3 with a minus sign. So total, the company had 20,000 of cash with a positive sign. 2018, the same lines should be considered. The same lines should be considered. No cash in the company, so it's 0. Cash in bank 0 also, and overdraft is 200. We can see it here, 200. I highlighted with yellow. So 0 cash, 0 bank balance with a positive sign, but we have a bank balance with a negative sign, which is overdraft. And if we consider it in our table and calculate the total, we'll see the following picture. 0 here, less 20 here. So the total cash available in 2018, I'm sorry, I was wrong with the date. The total cash available at the end of 2018 was 200 with a minus sign, 200 of overdraft. And we can easily calculate the net decrease in cash if we assume here the 0 cash, and here would be positive cash, and here would be negative cash. We can say that at the beginning of the year, the company had 20. It's here. At the end of the year, the company had 200 with a negative sign, 200 overdrawn, which is here. And the total difference between the 2 points, is 220. So we have just proved that our cash flow statement was compiled in the correct way.